Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of August 12th to August 16th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds amid growing speculation and anticipation as key economic data from the United States, United Kingdom, and New Zealand take center stage. With the US CPI expected to ease slightly, all eyes are on how this might shape the Federal Reserve's future rate decisions. Across the Atlantic, sterling faces renewed pressure ahead of crucial UK economic releases, while the Reserve Bank of New Zealand is poised for a possible rate cut. Meanwhile, the Australian dollar's recovery remains in focus, with domestic data and China's economic indicators likely to influence its trajectory. Investors are navigating these developments with caution as the global economic landscape continues to evolve. U.S. inflation is expected to ease slightly in July, with the headline CPI forecasted to dip to 2.9% YY from 3.0% previously. The monthly figure is predicted to rise from minus 0.1% to 0.2%. Core CPI is also projected to decline annually from 3.3% to 3.2%, while inching up to 0.2% month-on-month. A significant upside surprise could dash hopes of rapid Fed rate cuts, even as economic momentum slows. Conversely, a major miss might bolster expectations for a 50 basis point rate cut in September, potentially lifting market sentiment. This week, the focus will be on several significant U.S. economic indicators. Thursday brings the New York and Philly Fed's manufacturing gauges, along with July's industrial production figures. On Friday, the University of Michigan's Consumer Sentiment Survey, particularly its inflation expectations for the next 1 and 5 years, will be crucial. Building permits and housing starts will also draw attention if the data support expectations for aggressive Fed rate cuts. The U.S. dollar, already struggling to recover from last week's losses, could face renewed downward pressure. The pound has reversed most of its July gains, underperforming all major currencies except the dollar. Contributing factors include the Bank of England's recent rate cuts and ongoing riots across English cities, which have revived political concerns. In the coming week, focus shifts to the UK economy. Tuesday's labor market report could indicate if wage growth, currently at 5.7% YoY, continues to moderate, which the BO may need to see before considering further rate cuts. Wednesday's July CPI figures could also influence expectations for the BO's September meeting, where the odds of another rate cut stand at 30%. The Reserve Bank of New Zealand will meet on Wednesday, with growing speculation of a 25 BPS rate cut. While economists aren't expecting a change, traders are increasingly betting on a reduction due to optimistic inflation forecasts and a recent drop in inflation expectations. Investor confidence in an August cut has surged to around 80%. If the RBNZ follows through, the New Zealand dollar may not see significant losses unless the central bank hints at further cuts ahead. With the Reserve Bank of New Zealand likely to cut rates soon, the Reserve Bank of Australia stands alone with its hawkish stance, bolstering the Australian dollar's rebound against the US dollar. However, upcoming domestic data, including the wage price index and July's employment report, could pose risks. Additionally, the Aussie could be impacted by China's economic data, with industrial production, retail sales, and fixed asset investment figures due on Thursday. Any signs of a slowdown in China could dampen the Australian dollar's recovery.
This week has been marked by critical economic releases and shifting expectations for central bank actions across major economies. From the US CPI and its implications for Fed policy to the pressures facing sterling and the potential for a rate cut in New Zealand, the global financial landscape remains fluid and unpredictable. As these events unfold, market participants will closely monitor their impact on currencies, interest rates, and broader economic conditions. Stay tuned as we continue to track these developments and their significance for investors worldwide. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.